And if I can use this phrase from the film Jerry Maguire, show me the money. History repeats itself, and the price moves in trades. The trick is that when you're successful, you run your profits, and when you're not successful, you cut your losses.
Hello， 大家好啊！歡迎大家嚟到咧，我要做訪問呢個環節㗎。咁今日咧，我哋就遙遠的他請咗英國嘅呢個 CMC 首席嘅策略師 Michael Hewson 啊。咁希望大家都可以撳 like 撳 share 先啦。Hi everyone, welcome to our channel. So we are delighted to have our very first English-speaking guest on the channel. Excited to introduce CMC Market Chief Strategist Michael Hewson. Michael, thanks for joining us.
Thank you for inviting me on.
So let me give everyone a quick understanding of Michael's background. Michael holds over 25 years experience trading the financial markets, specializing in technical analysis. Michael spent 6 years trading currencies with a particular emphasis on charting and technical analysis. Michael regularly outperforms analysts from 29 international banks and financial institutions to top FX weekly ranking tables based on monthly, quarterly, and as well as annually forecasts for 5 major currency pairs. So Michael, let me start off with the first question. With 25 years of experience specializing in the technical analysis, can you share with us why you think technical analysis is a good strategy for investment? In your point of view, is there any limitations in terms of applying TA towards the FX, stocks or commodity markets?
Yeah, good afternoon. I think technical analysis needs to be used as part of a multifaceted approach. So I think it's very important that you don't put all your eggs in one basket, so to speak. You need to look at across a wide range of different facets when you're looking, particularly when it comes to investment, because I think when you're looking and you're talking about investment, it's important to think about your time horizon. So if you're trading, your time horizon is much shorter as if it is for investment. So you have to have a slightly different strategy depending on your time frame. So for example, if you're looking in terms of an investment, then price isn't really the most important factor when you're looking to put a trade on or gain exposure to a particular market, simply because your time frame is going to be anything over and above 6 months to a year, and you're looking potentially at value, you're looking at growth, and you're potentially looking at income. Whereas if you're looking, say for example, at a trade, your time frame is probably less than a week, so your mindset is completely different. But overall, all of that, the most important factor is in terms of your risk management. And I think that more than anything is something that I really want to get across. Technical analysis is part of an investment portfolio, if you like, but it's not the most important part. But if you're trading, risk management above all else is very, very important.
Actually, that allows me to go into my question, because especially in Asia, technical analysis is in Hong Kong as well. That's where most of our subscribers and where me and Greg are from. So in Asia or in Hong Kong, most of the investors or traders, they focus more on the technical analysis point. Every day they look at MACD or the 50-day average, different types of moving averages and stuff like that, right? So what we want to know is, in terms of professionals such as yourself, what's the percentage about that you focus more on in terms of everyday trading or investment that you use for technical analysis versus quantitative analysis or fundamental analysis? Because when we study MBA or CFA, we realize technical analysis is maybe 1 out of like 20 chapters when we study for the exam. So that's something that we're always curious to see in terms of the Western society. How much do you guys emphasize on TA versus fundamentals for professional traders such as yourself?
I think one of the things about technical analysis is it's viewed with a great deal of suspicion by academics, particularly when it comes to MBAs, CFAs. And to be honest with you, I really don't think it gets enough attention, because I think it's very, very important. It served me very, very well. And you look at an MBA, you look at a CFA, and you look at a whole series of data points. And the problem with those data points is that if you present those data points to an economist or a series of economists, the data is exactly the same. But these economists will deduce a completely different set of analysis from those data points. And yet, to all intents and purposes, the data is the data. So you pull all that data together, and these economists come out with a completely different conclusion to that data. What technical analysis allows you to do is to look at the sum of all that data and its effect on the price. And for me, the price is probably the most important part of the equation when illustrated on a price chart. Ultimately, it's about, and if I can use this phrase from the film Jerry Maguire,
show me the money.
Show me the money. Basically showing you what the money is doing around a particular asset class. So if you're looking at stock markets, for example, it's really about the fundamental analysis behind the performance of that stock. So you're looking at cash flow, you're looking at debt, you're looking at price earnings ratios, pegs, dividend yields, and all of that stuff. With foreign exchange, it's a completely different set of fundamentals. You're looking at the push-pull effect of one central bank against another, and that can be much more problematic. Who's to say whether the balance sheet of the European Central Bank outweighs the balance sheet of the Bank of Japan or the Federal Reserve, or the interest rate differentials between the two? Technical analysis drills down to that into a very simple price chart. Is it going up? Is it going down? Is it going sideways? And you then enter into the market based on your analysis of that price action.
Thank you. So a lot of people are skeptical on the concept of technical analysis because we are using historical data and to predict the future, right? So especially right now, so everyone is saying that the economy is really bad, but the stock markets are all going up, right? Why just buy and hold, right? Just hold Tesla for 3 years like that. So whereas FA and QA are more based on actual figures, is there any downside of using technical analysis, and who shouldn't use it?
I don't think there is any downside to using technical analysis. If you look at the data for Tesla, and if you look at the data, for example, for a company like Uber and Lyft, those companies don't make any money. Yet,
right,
to all intents and purposes, you wouldn't invest in them.
Yeah.
But if you look at Tesla, its share price has gone up 1,000% in the past 12 months. But if you look at its fundamentals, you wouldn't touch it with a barge pole. So it's about momentum. And I think if you're looking at technical analysis and you're looking at what the price action is doing, and you look at the trend, because one of the cornerstones from technical analysis is market price action discounts everything. History repeats itself, and the price moves in trends. So if the trend for Tesla is up, you buy it until such times as that trend comes to an end. And that, in essence, is what technical analysis is all about. It's identifying a momentum stock, looking to buy into it, and then getting out when that momentum fades and starts to reverse.
Great, yeah. So actually that goes, I think a lot of our subscribers wants to know now. Again, it's all good and technical analysis, momentum trading. They want to know, what do you use in terms of technical analysis? What kind of indicators do you use the most in terms of moving average, MACD, or because for us, when we do the education out here in Asia, so we focus mostly on the patterns or like the head and shoulders or the candlesticks and stuff like that. So I want to know a little bit about Yeah. Oh, okay, cool. So, interesting. So if you could give us a little bit of like what your strategy is, that would be great.
I think when you're first starting off as a trader and a technical analyst, it's very, very difficult to try and define your own style. But I would encourage everyone to do so. It's very, very easy to follow someone who has their own specific style and is fairly successful at it. What I would say is, as a trader and a technical analyst, I'm probably only successful in 50% of my trades. The trick is that when you're successful, you run your profits, and when you're not successful, you cut your losses. More importantly is to keep it very simple. So I take a very much structured approach to my trades. I ask myself a number of questions before I put a trade on. What's the market doing? Is it going up? Is it going down? Or is it going sideways? If it's going sideways, I'm probably not that much interested in it. If it's going up, I'll look for a pullback in which to buy it. And by that, I'll look at the areas of support and resistance. So I'll draw a series of horizontal lines on the chart, looking at the areas where the market stops, pulls back, and then goes again. And I'll also draw a horizontal trend line through the lows if I'm looking to buy the dip. That way, I can then define where my stop loss is and keep it as small as possible relative to that upward trend, but also can ride the move higher as long as I can in the confines of those support and resistance levels and those trend lines. And conversely, if the market is falling, I'll look to sell into strength with a stop loss above the previous resistance levels, looking to ride the move down. Now, obviously, those are just single trend lines or single horizontal support and resistance lines. You've then got triangles. You've got potential head and shoulders tops, head and shoulders bottoms. I'll also look for potential reversals, but again, reversals, they need to be confirmed. So if you've got a key reversal day or a bullish or a bearish engulfing pattern, which usually happens at a market top or a market bottom, but you have to be very, very careful when you're identifying those potential turning points, because you need to have a prior trend in place for it to be valid. So a bearish engulfing candle needs to happen at the end of an uptrend. It's no good saying, well, that's a bearish engulfing pattern if it's in the middle of a sideways trend.
Yes.
Where it happens within the price action that is the most important component. So if you've got it at the end of an uptrend, you see a bearish engulfing candle, you then look to see where there's a potential neckline for that reversal, wait for the confirmation, because the engulfing candle on its own is not sufficient. It's about having that physical example and then the market breaking down below a previous low and then breaking towards the downside. And the reverse is true at a market bottom. So you're looking for areas of compression, for areas whereby the trend is starting to break down before either taking your profit on your move higher or looking to reverse on a move lower. So MACDs, moving averages, and oscillators like RSIs and slow stochastics, they are used to confirm a potential pattern on a bullish or bearish reversal or a break of a trend line. They are secondary indicators. For me, it's very, very important that you look at the price action first. So look for higher lows and higher highs, or in a downtrend, look for lower highs and lower lows. Those are my primary indicators. That is the most important part. Everything else is secondary to that. So MACDs, slow stochastics, RSIs are all secondary indicators and need to confirm what my primary indicators are telling me. Because as anyone will tell you, an oscillator can remain overbought for hours, weeks and months, and the market continues to go higher. And the same applies to when an oscillator is oversold. The market can continue to fall for quite some time when an oscillator is oversold. So for me, I will discard them if they give me a completely contradictory signal to what the price action is telling me. And it's important to understand that, to get the basics right, build the ground floor in terms of trend lines, support and resistance line and price, and then the second floor, which is MACDs, moving averages, and everything else on top of that. They are secondary indicators. They help supplement my overall view, but they don't influence it.
Interesting. That's
a really a good lesson already. It's free.
That's actually very similar to what we preach as well, actually, because like when we see, let's say we see a hammer, and then a lot of our subscribers or our students ask, "Oh, is this a good time to buy?" But we see, like you said, it's a horizontal market. It's not, and the trading volume isn't that high, so we have to identify that the difference between a hammer and the bottom, whereas there's 5 or 6 different signals pointing towards, oh, this could be a support, versus like it's just a hammer in a horizontal market. So that's actually very close exactly to what we
you need to bring them together. So if you have a hammer near a market support, then you've got 2 factors that might suggest that is near a market bottom.
Yeah,
but it's not completely conclusive. It's really about stacking the deck in your favor. So, if you can get some sort of evidence that there is potentially a market bottom there, you've got a previous low from say 2 or 3 months ago or 2 or 3 years ago, historical data. This is where historical data comes in. You go back either 10 hours, 10 months, 10 days, 10 weeks, 10 years. Market memory is a very powerful thing, particularly when you're looking at, say, for example, foreign exchange, indices, or any other commodities. It is very, very compelling when you look back over the course of, say, 10 years or so and see the number of times the market has tested a previous low or a previous high and had a reaction off that. Now, if you're a trader, it doesn't necessarily have to hold. Initially, it can break eventually, but it will generally always hold on the first test and rebound. That's a trading opportunity. And the good thing about that is you can define your stop loss straight away, because your stop loss will be 50 or 100 points below that, and you could get a 300 point bounce off it. So you straight away got a risk reward there of you're risking only 50 or 100 points, but your upside, your potential upside, is double that. Exactly. And it's about managing your risk in that fashion, stacking the deck in your favor. You'll never make money every time, but hopefully when you lose money, your losses will be small because you've waited for the market to get to a level that you're comfortable trading at.
Yeah, I totally agree. So, all right. Thank you, Michael, for your insight in the technical analysis. So on the second part, we're going to look at more on the macro side, on the economy, as well as the situation right now. Obviously, everybody is concerned about the US and the China tension that's happening, as well as the precious metal market as well. So everybody, all subscribers, please like, share, comment on our channel, and then we will continue part 2 into this conversation with Michael Hewson. Thank you.
咁好似頭先咁講啦，有咩問題咧？記住 comment section 留言啦嚇，記住睇 part 2，投資唔係大學專利，下次見大家，拜拜。
真係多謝大家支持我嘅10年財務自由師傅一生投資藍圖嘅電子天書。早前嘅 pre-order 咧3日已經超額售罄啦。我哋 upgrade 咗 server 之後咧，正式凱旋回歸。而家係 pre-order 嘅時段，有興趣知道點樣先可以做到財務自由？我會用我親身嘅經歷話俾大家知，真係唔係遙不可及嘅事嚟㗎。即刻去下面連結收睇免費嘅1小時簡介加工作坊，仲快啲去！量化交易手冊新書發佈會加工作坊，10月5號會準時見大家。呢本亦都可能我最後寫一本書，但係新書預售已經賣完㗎啦。想支持我嘅新書都可以參加頭先講嘅免費工作坊，都有少量嘅書係當晚會賣嘅。快啲到下面連結報名啦！哇，1000人嘅茶敍投資講座又嚟啦，已經超過2000幾位朋友報名㗎啦。今次題目就係美國大選備戰新嘅4年，9月22號準時見大家。內容包括民主共和對內嘅施政，新嘅4年受惠嘅股票行業係由 Jackie 同埋德興去包辦嘅。對華政策，拜登嘅貿戰係咪真係容易打呢？由我負責嘅。美國大選統計，如果民主黨勝出，4年股市係咪有驚喜啊？亦都係由我負責嘅。最後就係 Dennis 負責，佢係賣大包噃。量化恆指平衡時空策略大公開，自製絕對回報喎。9月22號準時見大家啦！為慶祝我要做富翁 YouTube 訂閱人數超過30萬，回饋翻大家呢個遊戲呢，就係我要幫你俾首期，送你高達52萬嘅首期，幫你上車㗎噃。簡單步驟就係1，訂閱我要做富翁嘅 YouTube 頻道 2去到下面遊戲連結登記做玩家。3就係不停叫 friend 玩呢個遊戲，然後叫佢哋登記嘅時候咧填你嘅電郵做介紹人。我哋有22塊地同埋一個終極大獎，詳情可以睇翻說明點樣玩啦。我哋嘅遊戲係歡迎任何地區人士參加嘅，下一個上車嘅可能就係你啊！仲唔快啲去報名參加？今個禮拜仲有好多其他嘅免費線上分享會，全球朋友都係參加㗎。我哋有期指、期權、英國房地產、程式交易、美股班同埋我新書發布，大家記住參加啦！仲未訂閱富翁電視 MTTV， 快啲去訂閱啦！